Okay, 5.3 is all about if we have a dishonored check or if we're doing anything electronically through our banking. So a dishonored check is simply just a check that the bank is going to refuse to pay. There's many reasons that a check could be dishonored. The biggest one is normally insufficient funds, meaning there's not enough money in that account to pay that check out. If you knowingly write what is called a bad check, then so if you knowingly know there's not enough money in the account and you go ahead and write a check for an amount that exceeds what the balance is, technically that is illegal. So that's an INSF check. The check could be altered, the signatures could not match, the amount written in on the legal line and the amount written in numerically in the box don't match. The check is post dated, so it's for a future date. Or the person that wrote the check has put a stop payment on it. So basically they've canceled the check. Most banks are going to also charge a fee for handling a dishonored check. So not only are you losing money if there's a dishonored check, but you're also getting charged a fee due to that. So steps for recording a dishonored check on a check stub. We would just write dishonored check in our other spot, kind of like we did our bank service charge. And then we'd have to go and journalize that, which is what we're going to do in MindTap today. The other thing we're going to look at is anytime we have something called an electronic funds transfer. So that is when we are transferring money or buying something with the business debit card or wiring money or having an automatic payment. Anytime where physical cash or a check is not being used, that's going to be an EFT. These transfers are normally done online, requires a password, or you can do them through the telephone, like you can call the bank. We still have to record any sort of an electronic fund transfer, and the source document is always going to be a memorandum instead of a check because we're not physically writing a check if we're making an online payment or transfer. Read through those steps. The most common use of electronic fund transfer is with a debit card. Again, the major difference between debit and credit, so a debit card and a credit card, is when a purchase is made with a debit card, that amount is going to be automatically deducted from our checking account, whereas with a credit card, it's through a third party. So we are essentially borrowing that money and then paying it back at a rate of interest. Debit cards are fast and easy. Obviously, I'm sure some of you have a debit card. You can swipe it pretty quick. You don't have to sit there and fill a check out. You don't have to sit there and get your cash out and then get change back. The biggest problem is sometimes people don't remember to record those purchases or withdrawals. So especially in a business, we have to record all of those transactions being made. And we're going to use a memorandum. And those are always going to be recorded on our check stub in the other box. So where we recorded the bank service charge and where we would record a dishonored check. Okay, 5-3 work together in MindTap. So we have 3 transactions here. The first one is August 18th, and we received notice from the bank of a dishonored check from Christine Iverson for $126 plus a $25 fee. So not only are we losing out $126, we're getting charged a fee because Christine's check is bad. So the total that we are losing is $151. So August 18th. Our account title, we don't want to foot this bill. It is not our fault that Christine wrote us an insufficient fund check. So we're going to charge that back to her accounts receivable account in the hope that eventually she'll come back and pay that debt. So accounts receivable, Christine Iverson. Our doc number is memorandum 312. So M312. To increase accounts receivable, it's an asset. So we're going to debit it the total $151. And until she comes in and pays that, we're going to lose that amount in our checking account. So cash is going to decrease with a credit of $151. All right, next one, we paid cash on account to Schwartz Enterprises, $270 using an electronic fund transfer. So I'm going to guess we either paid online or we used our debit card. So the 20th, we don't have to write August. Accounts payable because we paid cash on account. So we're paying off a debt. Schwartz Enterprises. Our source document is memorandum 313, so M313. So if we're paying off a debt, so we're paying down a liability here. To decrease a liability, we have to debit it. So we're going to debit our liability account, 270, and that's coming right out of our checking account. We're just not writing a check. So 270 cash credit. All right, last one, we purchased supplies, $62 using our debit card instead of writing a check. Memorandum 314. 21st. Supplies is one account. Memorandum 314. Supplies is increasing by $62. We're gaining $62 worth of supplies. We are also losing cash because we used our debit card to purchase the supplies. Okay, that is 5.3. Make sure you do the on your own in any terms.